investing in any vehicle is the same. You realize what you do and don't like. And for me, it didn't come right away. And I think it's important to share with anyone, you're usually not going to find it on your first try. And that's okay. Setting the expectation that you might try a couple different investment vehicles. And some people like way more passive investments. Others like way more hands-on. They like that control. And you just got to try. You just got to start.
Welcome to the Real Freedom Show, where we inspire you to pursue your passion to gain time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. Let's get some real freedom together. Hello, everybody. Welcome to another episode of Real Freedom, Real Estate Leverage Freedom, where we talk about different ways that people build time and financial freedom through opportunities in real estate. I'm your host, Mike Swenson. If you want to get started on your investing journey, you're trying to figure out where do I go, how do I get started, check out our website, freedomthroughrealestate.com. That's freedomthroughrealestate.com. We put all of our podcast episodes up there, great blog content, learning, how to analyze deals, which lane do I want to be in. But really, we do this podcast as a way to share awesome stories of people who are getting into real estate, whether it be full-time, part-time, you name it, just to give you a chance to hear a story that hopefully resonates with you, inspires you to be able to continue your journey and figure out what you want to do in the real estate space. So today we've got Joseph Rasberry here. He has been in the healthcare field since he was 18, high income earner as a W-2, working as a physician's assistant, got into real estate, doing some house hacking, and then getting into some masterminds, is now working on developing a luxury memory care home in Houston. For those that are devoted listeners to the podcast, if you have our episode about a month ago, a little over a month ago, Aaron and Amin, they're actually working on the same project. And so it's going to be really cool to hear your take on your background, getting into the project together. So really excited to have you on the show. So welcome.
Awesome. Thanks, Mike. And really appreciate you having me on and even meeting you in person in Minnesota. It was pretty awesome. And now it's coming full circle back on your podcast. So I appreciate you having me on.
It's the prerequisite. You have to come to Minnesota and meet me before I have you on the podcast, right?
Heck yeah, man. Rochester was nice. And the Twin Cities.
Awesome. Cool. Well, why don't you just start a little bit? Yeah. Tell us about your background outside of real estate, and then we'll get into anything from there. Just talk about kind of your background, what you did before you got into real estate.
Yeah. So currently I'm a physician assistant in the emergency department. I've been at the front facing bedside for over a decade. Since I was 18 in high school. I started as an intern on a hospital unit in high school, and then went to college for nursing, worked as a tech while I was in nursing school, and then eventually decided I wanted more and went back to school as a physician assistant. All my experiences in the emergency department, and I've been a physician assistant now for 4 years. And I currently do a locums position, so I travel all around the country. I'm based out of Central Texas, and love what I do, but I'm trying to get some of my time back and really just do that through real estate and some other asset producing or income producing assets. So healthcare is all my background, but we can kind of get into the business side and real estate once we jump into that.
Talk a little bit about your role. So, being able to travel around the US, obviously you're, earning a decent income at the same time, but just maybe talk about why you decided to do that. And then maybe how you got introduced into real estate as far as, whether you're starting to plant some seeds for the future.
Yeah. So kind of going from the very beginning, I knew I wanted to get into healthcare mainly because I enjoyed helping people, and I really wanted a job market that was always secure. So I think that was kind of the inception as to why I chose my field. And starting off into nursing, I worked out as a tech in the emergency department while I was in nursing school. Graduated, worked as a nurse, and I quickly realized, I made decent income, but I wanted something more. And I worked with physician assistants, and I was really impressed with their work, what they were able to do. And eventually that led me going back to school and graduating. And I've ended up in Texas. I love Texas, and started there as a couple years in the emergency department. And then I took a locums position, and now I travel all around the country, but primarily the Southwest. And I do love what I do. I love helping people. I love utilizing my skills and my knowledge, procedures, all of that. And it's very rewarding. but I quickly realized, I wanted something more. And I've kind of noticed that in my journey in life. I've always kind of wanted something more, and I feel like I can give more. And as a physician assistant, during my first year, I realized, this is good money, but I can play a bigger impact. And real estate was first introduced to me in 2021, and that was a time of high inflation. And honestly, a lot of my direction towards real estate was born out of fear. A lot of high home prices. I just graduated as a PA in 2021, and I looked around and I was thinking, well, I'm making six figures, but a single family house now is over 400,000, and it was very stressful for me. I remember being in my apartment and just thinking, man, how am I ever going to afford a home? And I'm someone that makes great income. So to try to essentially transition into real estate, I was listening to a lot of podcasts. I didn't have many people in my life involved with real estate, but I went to YouTube, listened to a lot of podcasts, and found out house hacking is an easy way to get into real estate. So I started narrowing my buy box and found a home local to my first job in Central Texas. And I got my first house hack. So that's an easy way to get into real estate for anyone that is new to real estate. And it kind of is a gateway drug, so to speak. And yeah, I'm happy to get into more, but that was kind of my start, was a house hack, and I still have had that house hack to this day.
So single family home, was it a FHA loan, like a low down payment loan, or what did you have to put down to get into that?
No, it was conventional. I put the
Oh,
minimum
conventional.
down
Okay.
5%, and I got a great interest rate. So I bought at the peak, but I have a four handle on my interest rate. So I'm very happy I bought when I did, and it's been great. And I've been traveling now for the W-2, and I'm able to have my roommates pay for my mortgage, and I'm only home half the time anyway. So it works out to this day in terms of lowering my cost of living and paying for my housing.
Yeah, I mean, when people ask me getting started what to do, that's the best advice that you can have. Whether it's single family and you're renting out rooms, or you're doing like a small multifamily and renting out other units and you're living in one unit. I just think like stage of life that makes a lot of sense. Financially makes a ton of sense. I had some friends of ours where one of the guys, when they all graduated college, bought a house, and all of his roommate or all of our friend group, rented from him. And I was like, man, this is such an awesome opportunity. I can't remember if I was married at the time or we were engaged at the time, and says like, didn't work for me. However, this guy was making bank, getting most of his more than his mortgage paid for by roommates, and did that for a few years, and then kept that as a rental, and then bought another property when he got married. And so I think there's so much value there if it works for your stage of life, if it works for your financial situation, to be able to do that, because it's a risk, right? And like you said, buying at peak of the market, there's a lot of stress with that, but to be able to have those other people, paying the rent, and then what it opens up for doors in the future in terms of potential equity, cash flow coming from the property, experience as a landlord too, when you're looking at doing other loans, there's just a ton of value there. But you got to be the one willing to take the risk and being able to put the money down, whereas, other folks aren't ready to do that, or maybe not in a position to do that.
Yeah, and I still remember to the day how nervous I was to close. It was my first house. It's a new build. I'm happy I went with it, but I remember at this time I was praying and thinking, man, is this right for me? And I'm really glad I ended up moving forward. But as a first time home buyer, I remember just being so nervous and hoping it was going to work out. So I'm glad I took action, and it's just led to so many more opportunities in my journey, just taking that first step.
Yeah, and even just from a confidence standpoint, right? Like knowing, okay, I can do this, right? Like I found somebody to pay the mortgage. Now, what else can I do in real estate outside of that? So yeah, talk a little bit about kind of the next step after you got that closed and got your roommates in. Where did your mind go next?
Yeah, so you touched on it. It is great experience starting off as being a landlord, because you are managing tenants. At the end of the day, they are roommates, but legally they're tenants. So that's been great experience for myself, and I've learned what I do and don't like. So that is just as important in the journey, as figuring out what you're willing to do, things you don't want to do, and like you said, I won't always be in this house hack. This is a special season in life, and moving forward, I quickly realized I couldn't scale, or I didn't want to scale house hacks. That wasn't appealing to me. Some people in the house hack world, they'll buy a single family home every year through conventional loans, Freddie and Fannie, and move on. And then before you know it, you'll have 4 or 5 homes, but you're managing 20, 25 tenants. And that was not appealing to me as someone that's a pretty demanding W-2. So I stopped there and I quickly um, transitioned into um, learning about other opportunities. And someone that's a PA and educated, I realized I there's a lot more to learn, and that's why I sought out some masterminds. So I joined several masterminds, not all at once, but kind of trended upwards. And I'm in 4 or 5 of them today. But one of my favorite ones, they were doing a lot of commercial real estate, a lot of big deals, buying small businesses, and it kind of dawned on me, single families are nice kind of base hits, but you only need a couple big home runs in life for financial freedom. So um, I started off with some slow flips, and those are basically creative finance, single family homes. And I also realized I didn't like that. So you have to try a couple things before you realize what you do and don't like, what works for your life, what aligns with your long-term vision. And I bought a couple of those out-of-state single family houses, and I raised capital for them. I purchased, worked with some wholesalers, and then I sold them through seller financing to first-time home buyers or investors. And I got out of those because, like I said, I wanted to get in some bigger deals. Um, I started investing in some syndications, some mobile home parks specifically, passively. And that was great experience too, because uh, as much as you want to actively earn income through your own investments, it's also great to become an LP or a passive investor for other people's big deals. So that's been my journey. We can jump into what I'm working on now or however you want to take it. But that's been a little bit of my journey since the house hack is through a couple syndications and then some creative finance single family homes out of state.
For people listening to this, realizing that where you end up in real estate is not necessarily where you begin. And it's that journey that helps you to understand what you like and you don't like. I know for me, we had done a flip and I like doing work on the property. I did construction in college for a couple of years, so I feel like I'm capable of doing it. But I then naturally got sucked into doing it because I like doing it. And fast forward, we worked on it for 3, 4, 5 months. Spent a lot of time away from my kids and my wife, and we ended up not making that much money on the deal. Then I realized I have to insulate myself from single family because I'm going to get sucked into doing it. And that was my
Mhm.
transition to multifamily is I need to take on a property where I'm not going to try to insert myself into it. And that was the thing for me, but it had been doing those things. And for you, it sounds like, yeah, you did a couple of things, realized you didn't like it. And so in a lot of way, that kind of narrows the focus for you to understand what do you really like doing. And that may change down the road, 5 years from now, 10 years from now, we hop on another episode and you're like, hey, now I'm into something else. But you've been able to dip your toe in a few different things from house hacking, out of state. You've done some creative financing. You've seen some mobile home park stuff to kind of get a sense of what's drawing you in like a magnet and what's maybe repelling you away to help you decide what your path's going to look like.
Yeah, exactly. And that's so wise what you said. You got to try things. And so many people that get into any focus in life, even a hobby or travel or dating, like you gotta try. You gotta dip your toes in, figure out what you do and don't like, areas you like living. Um,
Real estate
you know,
dating. We should
yeah.
change the podcast, right? We'll call it real estate dating or hinge for real estate, and we can talk about what we like and what we don't like about everything as it relates to real estate.
It's true, man. I've dated some girls and you quickly realize I don't like that type of girl. And then some you wouldn't expect and you're into that now. So real estate is the same, investing in any vehicle is the same. You realize what you do and don't like. And for me, it didn't come right away. And I think it's important to share with anyone, you're usually not going to find it on your first try, and that's okay. Setting the expectation that you might try a couple different investment vehicles, and some people like way more passive investments. Others like way more hands-on. They like that control. And you just got to try. You just got to start. I was very indecisive to start, and a lot of that was based out of fear. But once you start moving and taking action and in doing, getting your reps in, you get a lot more confidence and realize I can do this. and I'm capable of a lot more.
Are you looking to get started or scale in real estate investing but don't know your next step? Are you overwhelmed thinking about finding deals, analyzing deals, doing due diligence, and managing properties on top of it? Go ahead and push the easy button and invest with us. Real estate investing is what we do full time. We've done dozens of deals with hundreds of doors. We have the knowledge and experience to handpick the best deals that most investors can't find. We've got large off-market deals all the time where you can hopefully find returns and economies of scale that you just can't find on your own. The best thing is it's 100% passive to you for less capital than you put down trying to acquire a property on your own. Don't let this year go by where you don't make the leap, add to your portfolio, or you just sit in analysis by paralysis. To find out more, visit freedomthroughrealestate.com and click on invest. You can book a call and learn more there. So get to scaling your portfolio now with us by your side. Talk a little bit about the out of state, the creative financing type stuff that you did. You know, for some people, they might realize like, oh, shoot, going somewhere outside of what you know and where you've been, they see that as a different risk because it's a location risk of somewhere that and maybe you were familiar with the area. I don't know, but would love to just kind of hear a little bit of your thought process in choosing to go out of state versus something, you know, finding something in Texas. I'm just kind of curious to hear your thoughts on that. And then I also agree, like you're also flexing and growing your muscle of how to analyze deals through trying some different things as well, which ultimately can help you find better deals when you can see what are less enticing deals.
Great question. So I decided to try these creative finance single family homes out of state because I you can scale them. It's a strategy you can scale. So just very briefly, I'll explain what I did and the
Hmm.
strategy behind it. So I would raise capital for these distressed single family homes. They were valued under market, so I'd buy them very cheap because they needed to work. I would raise capital through private money lenders on a 5-year note. I'd pay them 12% interest, which was great, right? 12% on your money, and I'd pay them back monthly. And I would buy these homes 100% cash through the private money lender. And then I would sell them, market them to first-time home buyers or investors. I would keep the spread, which would be very narrow, couple $100, and put them on a 30-year note, a traditional mortgage. And I wouldn't qualify the buyers. There was a lot of risk with it, but a lot of the risk was eliminated because you were selling them a home with low down payment and a house that they could work on, fix up. It was already distressed, right? I wouldn't fix the property at all. And I'd give them an opportunity at home ownership. And a lot of these buyers, they wouldn't have great credit. They wouldn't have, 20, 30K to put down. They might have two or $3,000, and these were very cheap homes in the Midwest. So you just had to make your numbers work. But the strategy behind it was you wouldn't really make anything for the first 5 years. I was okay with that, and then after you pay off your private money lender, the remaining 25 years is just complete cash flow, and you've had those
Mhm.
properties paid off, and you could scale it. I did a couple of them, but there was a lot involved, right? So you had to raise capital, debt. Um, you had to find and source the deals. You had to make sure they worked, and there was demand for these houses in these small little markets in the Midwest. And you could run ghost ads, and I can get into that if you'd like, but to make sure the demand was there. And then you would after you market it, you'd have to find the buyer, handle all the legal paperwork, and that was a lot. The paperwork in the specific county and state to make sure you're doing everything up to legal standards from selling a house, seller finance, because essentially you become the bank at that point. And after you sold it, it was pretty passive, but there was always a risk of them defaulting or not paying. So what I didn't like about it was I had to do everything. I had to source the deals, I had to raise the capital, the debt, I had to market it, I had to sell it. And I didn't like that, and it didn't align with my long-term vision because I was going to have to get like 20 or 30 of these homes. And like I said, you can scale it, but I didn't enjoy it. I didn't enjoy doing all the roles, especially being a busy W-2 physician assistant traveling.
So, real quick, before we get into what you're doing now, talk about the limited partner. You mentioned how you'd been a limited partner in some deals. You know, for people that aren't familiar with it, kind of what was it about being a limited partner, being more passive that intrigued you, and then how were you able to network and find those deals?
So I've enjoyed my experience as a passive investor in these syndications, specifically mobile home parks. In fact, how I found them was in the current mastermind I'm in. So I know someone that he has 16 mobile home parks, and he's in one of my pods. So I meet with him weekly. He's very experienced, and he approached me and gave me an opportunity at investing with him, and I wanted to try it. And yeah, I just learned about it and learned this is something that gets way better returns than your typical stock market. It's passive, right? So I don't have anything to work on the project, and you get a lot of tax benefits, depreciation, and it was another opportunity for me to learn and just kind of stand by the side and learn by osmosis and grow in some of my other real estate investments and figure out what I do and don't like again. So that's been a great experience too. I've done a couple deals now.
I think for that, being able to, yeah, see a bigger deal, see something that maybe it's a little bit larger than you can take on yourself, being able to see how they analyze it, how they explain it, how the numbers work. It's kind of like a little bit of an internship for, doing that in the future yourself, seeing some cracks at how people that are professional are doing this and how they're raising capital. I think there's a ton of value in doing that. So then fast forward, now you've got a deal that you're raising capital for a big deal. Talk about how that came to be.
Yeah. So the one thing I'll say about those creative finance single family homes was I really enjoyed raising the capital. That was one part of the project that I did enjoy. And I quickly realized that's something, I want to carry on to my next project. And I paid back my private money lenders every single month, and I enjoyed giving them those returns. So I did find a lot of delight just in being a great steward of people's money and giving them an opportunity at something better than the market, like we said. So, all that being said, leading into my current project, I'm working with another partner of mine, a few partners actually, to take down two memory care mansions, boutique residential assisted living, which is quickly becoming a very highly desired asset class in multifamily and business because it essentially is both real estate commercial and a business. So it's pretty cash flow heavy. We can kind of get into some of that later, but I found my partner actually through the same mastermind, and we're in the same pod. So just like the mobile home parks that I found in my pod. And really quickly for your audience, a pod is just a group of guys. There's five of us, and we meet weekly. We talk about our businesses, our real estate, how we can uplift each other, how we can help in any way, and kind of talk about weekly wins, bottlenecks we're going over. So I've really gotten to know both of these partners in that mastermind and weekly pod over the last almost 2 years now. So it's so important to know who you're investing with and how great of an operator they are. So there's a lot of trust. But I also found my current partner that we're working on this residential assisted living in through my pod in the mastermind.
Well, I think it also speaks to getting around folks who think big, have big goals, maybe well-networked individuals, ambitious. I think it'll put you in the right environment. They talk about rising tides lifts all boats. And if you're in a spot where that's happening and people are knocking down big goals, you're like, hey, I want to be part of that too. And I want to do that myself. And then it has larger conversations that, had you not been in that group, you probably wouldn't even be talking with folks about memory care and, doing these large deals together. And so I think it can help you accelerate your career path and then put you in the right rooms to be able to bring some of these deals to fruition.
Yeah, exactly. One of my favorite quotes is your network is your net worth. And like you said, I would never even be thinking about commercial real estate or businesses. I'd still be on the single family game. And there's nothing wrong with single families, but these bigger deals can significantly increase or shorten your time frame for financial freedom and getting where you want to be. So, so much of it is a learning game and just being surrounded by people that are doing these big deals. It's really just changed the entire trajectory of my life.
So talk a little bit about the project, a little bit maybe about kind of your roles and how each of you are dividing up the work and kind of maybe the goals or the timelines that you have set here.
Yeah, yeah. So my other partner, Aaron, he's the CFO. He's got a significant background in as being a financial manager, financial analyst. So he's done all the underwriting. He's very risk averse, so he's very conservative on his underwriting, which I like. So he's doing a lot of the business ops and financial raise portion of the project. I'm also assisting in the raise. It's kind of all just hands on deck because it's a massive lift. It's a massive raise. But what I'll be doing, my title is Strategic Director of Growth and Partnerships. So basically, the first part, I'm going to, like I mentioned, help with this raise, this capital raise, because it's such a heavy lift. But once we get this funded, we get some shovels in the ground and start getting it built. I'm going to be helping my other partner, the CEO, Andrea, the wife of Aaron. And I'm going to essentially be forming strategic partnerships in the community and leverage my healthcare background. So communicate with local physicians, um, SNF skilled nursing facilities, case managers, and the hospitals. And that's really where you get a lot of the residents when they're declining and essentially, the degenerative disease of Alzheimer's or dementia leads them to needing more assistance in a residential home, which is what we're building. So I'm going to be helping with lead generation and refining clinical operations with the staff. And for anyone that works in healthcare, they know that staffing is one of the most difficult things, whichever setting, ambulatory, inpatient, outpatient. And my goal and what I hope to bring is retaining and acquiring quality staff for these memory care mansions. And that's really where it starts in a project like this is providing quality care and keeping some rock stars on your team. So I'm really excited for the operational standpoint once we get this thing built.
So when are you anticipating construction starting and then completion? And then also curious to hear kind of how does that parlay in with what you're currently doing in your day job? What's that future hold for you?
So, target is August of 2025, shovels on the ground, and we're working with several GCs. So we feel confident we can have both of these built by 12 months, a year. So August of 2026 is being fully built. They actually think we could have this constructed in 10 months, but again, we've underwritten everything pretty conservatively. So we're allowing for that little cushion of 12 months. So that's a little bit about the timeline. In terms of working with my W-2, I'm able to do a lot of this remotely, but I will be going pretty frequently to the project every month. And like I said, strengthening those relationships and then being able to help hire and retain them. And so I'm excited. A lot of it is, like I said, can be done remotely, but there's nothing that can substitute being on the ground and meeting and forming those long-term relationships. So I'm looking forward to that.
It's really cool to hear your background, your passion for helping people. I often think about transferable skills that people have coming into real estate, wanting to help people, raising some capital in the past, enjoying doing that. Now you're doing some of that in this project, being able to be a leader. And then looking at Aaron's background, had some assisted living experience with properties that he owned in another city. Now he's like, I can do that. I know he was in a mastermind, where he learned a little bit more about the nuts and bolts of how to put all this together. And so you can just kind of see these little breadcrumbs in your past lead you to where you go in the future. And then, you're able to join forces because you're in this group together. And so I think it's just really fun to see how these big things come to be and how you can trace it back to these smaller decisions over the last couple of years that lead you to where you're at. And obviously there's going to be bigger decisions here in the future. And so it's just fun to see that experience and how that all came together and your guys' partnership.
Yeah, no, I appreciate it. It's so important to choose the right partner. And that's part of the reason why Aaron reached out to me was he realized my background. We know each other very well, right? We meet every week. So I'm just happy to be able to leverage my background just like he is. And you're completely right. He's got some residential assisted living homes out in the Northwest. And we also have some other strategic partners that have built the same mansion. They've built two of these out in Central Texas. So we're really just replicating a lot of their business plan, including a lot of their care models and even down to the floor plan. So we're definitely going to this with eyes wide open. So we feel like we're going to knock it out of the park. We've underwritten it pretty conservatively, and we've got a hell of a team. And yeah, we can kind of jump into that too. But we've got every area we feel very confident with the right people in the right. right seats.
It's great to see. I mean, you're taking risks, but you're taking calculated risks. You've got people looking over your shoulder. You've got people helping you. And so just to see in a short time of, 3-4 years, all that you've accomplished. And, it's like that hockey stick growth, right? Now that you're narrowing in your focus, you're building those partnerships, things will continue to happen more and more frequently.
Yeah, exactly. Relationships are so important. I just love being around other people that are doing high level things, projects, real estate, and it just gets me so motivated and passionate. So I'm just happy to be surrounded by other rock stars that are doing big things and think big in life.
So for people that want to reach out to you, learn more about it, or, just tap into your experience, how can they do so?
Yeah, so we have some landing pages. We have a pretty vast email network. But I would say if anyone wants to reach out, they can reach out to me just via email. So joseph.rasberry, Rasberry, 21 at gmail.com.
Awesome. Well, thank you so much for sharing your story, and best of luck to you guys as the project unfolds, and it's going to be exciting to see what happens with it.
Yeah, man, I can't wait to just have this thing built and just provide high quality care to these future residents and bring back our investors some high returns. So thank you again, Mike, for having me on. Really appreciated this.
Thank you.